This is a slideshow of setups that I use when trading the triangle trend package of indicators. Now the first slide shows the time series forecast. As it crosses above the equity moves up, and as it crosses below the equity moves down. I've also added the linear regression slope to this slide, and notice how when the linear regression slope crosses above its zero line, that is exactly the point that the time series forecast crosses above the equity. When the LRS crosses below its zero line, again, that's exactly the same point that the TSF crosses below the equity. So in effect, what the LRS does, it flattens the equity into a straight line. And when the LRS moves above the equity, above the zero line rather, you can expect the equity to go up. And when it moves below the zero line, you can expect the equity to move down. Here I've added the R-square indicator to the LRS panel. Now the R-squared indicator is an indicator that's been around a long time, but it still hasn't lost its effectiveness. R-square indicator measures randomness or trendiness. When it's below its trigger line, which is the line that's just below this white zero line on this chart, when it's below that line, it is random. And when it crosses above its trigger line, that indicates a trend is moving. It doesn't tell you which direction the trend is, but the LRS indicator will tell you the direction of the trend. For instance, when the LRS is moving down and the R-squared indicator moves up above the LRS and above its trigger line, that indicates a downtrend. When the LRS indicator moves above its zero line and the R-squared indicator moves above its trigger line, that indicates an uptrend. Now here we have a rectangle that I placed on a choppy area of the chart, and below that you can see another rectangle, and the R-square indicator is below its trigger line during this choppy period. Now toward the end of the choppy period, the R-square moves above its trigger line. However, the LRS indicator is moving down at this point, so they are not moving in the same direction, so there is no uptrend. Here I've circled the LRS and the R-squared indicators as they cross their zero line and trigger lines respectively. However, this does not indicate a trade. If you look up above that, you see the binary triangle indicator shows an uptrend. However, the next indicator above that is the DMI differential, and even though the dots are green, the indicator line is red and is below the dots. You would not take a trade when the indicators do not match up. Also, directly above the dots, the equity lines are red, which indicates the volatility is not appropriate for a trade. Here I've circled the equity where there is a yellow bar followed by a number of green bars. At about the same time the yellow bar and the green bar are forming, the binary triangle indicates an uptrend. And right below that, you can see the LRS and R-squared indicators have moved above their respective zero line and trigger lines. This is what I call a BTF trade or bet the farm trade. You can have a high degree of confidence when you see this particular setup that it will be a profitable trade. Now here we have the same trade only to the downside, a BTF short trade, which again we have a yellow bar followed by red bars. The DMI differential dots are red, the indicator line is red, and below those dots the binary triangle indicates a downtrend, and right at the circle I placed on the equity, if you look at the bottom of the chart, you can see that the R-squared indicator crossed above the down trending linear regression slope, which indicates a short should be taken at that point. Here I've put in a chart that indicates yesterday's close and today's open. The purple dots above represent yesterday's close and the yellow dots represent today's open. You can see how they act as support and resistance to the equity, as in this screenshot the equity is trading between those two ranges. I put a vertical line on the chart right as the linear regression slope crosses above its zero line. However, the R-squared indicator does not move up at this point, continues horizontally below its trigger line. So obviously this is a trade you would not want to take, because up until this point the equity has not been able to penetrate above yesterday's close. In fact, it bounces off it here a couple times and then moves down again. Here today's open rather, it cannot be seen because it's below yesterday's close. But if the equity moves above today's open and above yesterday's close, that is a pretty good sign that there's not much resistance to the upside, and you can see a very clear buy signal here and a nice profitable long trade. The reverse is true when you have yesterday's close and today's open is below yesterday's close and the equity moves below both of these lines. Then that is a good short trade, and you can see from the time period at the bottom of this 500 tick chart, very little time went by during this trade, just a matter of a few seconds. Probably an example of program trading. Now this chart shows how the equity is above yesterday's close and above today's open. When that happens, that's generally a good indication that you can have a successful long trade at this point, and you can see how the indicators line up that would indicate this is the point where you take a long trade. These are basic examples of setups that I use when trading the triangle trend package of indicators.